Welcome to an Alternate Hue. I'm Hugh Anderson, and this is some of what came across my desk this week. There's no E in the PE. Many investors are extraordinarily surprised by the big bounce we've gotten in the stock market compared to the real economy where we're seeing mass layoffs and business closures. So many business closures, in fact, that 70% of the world's economy has effectively been shut down, and only some of which is beginning to slowly reopen. The market dropped, and investors know, or should I say hope, that the worst is over, that we'll get that V-like recovery. But consumer behavior has changed, not necessarily permanently, but the reality is it's going to take time for people to adjust back to normalcy, and it could take months, if not years. During a recession, 30% of earnings disappear. And right now, many companies whose owners don't even know what kind of business they're going to do in the coming quarters are pulling their earnings estimates because they just have no visibility on what the economy and the markets will look like going forward. So the recovery that we're talking about is not a matter of weeks or months. This could be a function of years. Not necessarily completely bad for years, just that it's going to be a while before we start seeing real recovery. The news on the virus front is getting somewhat better, although everybody's fearful of the second wave, but that remains to be seen. But it's going to be a while before we see economic blue skies despite the government's intervention with all their monetary stimulus that they're hoping to improve the economy, especially helping folks who have lost their jobs suddenly through no fault of their own. Estimates forecast that the second quarter could see GDP drop by as much as 35 to 50%. And nobody really knows. There are many estimates out there, but that is a dramatic fall in economic output. Oh, it makes us long for the days of 1 to 2% growth in the economy. One of the key statistics we'll be watching is the personal savings rate. As people remain insecure for the time being because of the economic dislocation, they'll tend to hoard any available liquidity they have. They'll spend it, of course, on food and so forth, but they will not spend it on what is called discretionary items to a great degree. And so we'll start watching the personal savings rate rise. Of course, savings is money not spent, and that's what an economy starving for revenue will be looking for. And so at some point, we'll be looking for that saving rate increase to peak and then hopefully start coming down in a moderate fashion. But at the end of the day, savings will count for a lot. Another thing to watch is that economic dislocations tend to be catalysts for accelerating trends that were already in place. So think of home delivery of restaurant food, working from home, driving less, and all of those things we've heard so much about in the last several months. But what industries will get truly disrupted in the new environment? I'm looking at you, higher education, where the cost of a 4-year degree now costs more than a mid-sized home. Many people will opt for online delivery of the same curriculum from world-class instructors at a fraction of the cost. April is usually the month of the year where the federal budget deficit looks the best, quote unquote, because it's April 15th when we all have to pay our taxes. Well, this year in 2020, the federal budget deficit was $738 billion, now year to date making the 2020 federal deficit bigger than all of the Great Recession. And that, of course, is through these various programs to help shore up the economy and individuals who's lost their jobs and businesses that were closed. The problem with this deficit spending, though, is it's just shoring up a major hole in the economy. It's not going to productive uses. It's not building highways, expanding our telephone infrastructure, our wastewater treatment plants, restoring roads and bridges and so forth. The problem now becomes, are we building too big a deficit, too big a hole in our government finances to truly continue to be the great nation we always have been? Today's cheerfulness can be summed up in 4 words. This too shall pass. Maybe like a kidney stone, but it's going to pass. The pandemic will subside. A vaccine will be found at some point, and the economy will recover. This country has been through many traumas before and risen to greater heights. So there is no need to be fearful of the future. We need to hunker down now and maintain perspective. But the future is extraordinarily bright, and those trends we spoke of before will lead to better and brighter horizons. I think you can compare what we're going through economically to a forest fire. A lightning strike hits a tree and sets a forest on fire, and that's the bad news. The good news is the dead trees and underbrush gets cleared out, and that creates an environment for future better growth. And I think that's what we have to look forward to. That's it for this week. Thank you for listening to An Alternate Hue. I'm Hugh Anderson. I'll see you next time.